Hello, it's Robert Miner with Dynamic Traders Group with today's DT Daily 5-minute update and trade strategy for our YouTube and Twitter followers. I'm going to begin something a little bit new this week from our normal updates. I'm going to focus on one market, and we will look at some immediate trade strategies for that market, or one or two markets, and but I'm also going to be looking at the intermediate to longer term position in that market, at least the potential for that. The reason for that is we're between now and the end of the year, we're in a time period when we have some very, very significant time factors and pattern factors that indicate we may have some major reversals or trend continuation signals. So today we'll take a look at one market. That's going to be the dollar and the euro. And because I think they're at a very significant point that I'll be able to show you, and they'll help you make some major decisions based on the potential upcoming dollar and euro trends. So let's get started and take a look at those two critical markets. This is the euro daily data, and it's just over the last few weeks. What's critical is that, well, number one, we're going to take a look at a market we can make a trade here real soon to make some money at. And then we'll take a look at some potential longer-term trends that might be good for some long-term sort of position trades, as well as affect many other markets. So let's take a look here at the daily data and what's significant coming up from the October 1st low, potential 5-wave advance. This is textbook Elliott wave. And our daily momentums have actually made bear reversals. So that means we're within a couple of bars of completing what I call a daily high, which will complete the 5-wave advance. We've reached right into the ideal end of wave 5 price target zone. And as I told our subscribers in our update yesterday after the market closed, that even though the daily momentums have made bear reversals as of yesterday, and I'm recording this on October 16th on Wednesday afternoon, mid-afternoon, is that more than likely the pattern is suggesting a new high, even though the momentum has made a bear reversal. Well, we got that exact thing today. We've reached right into the ideal target zone. We're within a day or two of completing this 5-wave advance. Now, what's significant about this is that should not be the end of a correction. What it should be is what we call a wave 1 or a high, followed by around a 3 to 5 day, sometimes as much as 6 or 7 day corrective wave 2 or B. And when that's finished, then the bull trend should continue to a new high. Now, and I call that the immediate bull trend. So number one, if you happen to be long the euro or short the dollar, get your stops pretty close to the market. We're right near a daily high that's going to be followed by at least 3 to 5 days sideways to down in a wave 2 or B correction. The real trade in the days ahead, because the higher time frame weekly momentums are bullish and not overbought, the real trade's going to be when we complete the wave 2 correction, which should be followed by another advance to above whatever high we make here between today and the end of this week. That'll be a great setup. Those are the kind of things we identify to our subscribers on a daily basis. So be prepared for that. Now, how big a trend change was this October 1st? First, it has the potential for being very, very significant, not just for a bull trend lasting a few weeks, maybe not even just for a few months, but maybe a trend lasting for at least a year or two. Let's expand out to the monthly data, and let me get a little more data on here. There we go. I'm going to have to, sorry, I didn't have this set up for you before we got started. Here's what's really significant is coming off of the July 2008 high, 11 years ago, over 11 years ago, is we have completed what we call a wave 1, 2, and a 3. And they all subdivided, textbook Elliott wave. If you're familiar with Elliott wave, you'll recognize this, subdivided perfectly. But what is significant is the January 2017 low should not be the end of this bear trend. When we finish a correction, wave 4 correction, then we should continue to a new low. But these are trends that last several months to several years, and we haven't completed this sideways to up correction for what we call wave 4 yet. We probably have many months to go, if not a year or two, and that's very significant. What's more significant is the place we're at right now. Let's focus in here a little bit. This is data right up through the end of today. Of course, this is monthly data, so this month is not complete yet. But we have a potential for making a very significant reversal month. But what's more important is everything is falling into line perfectly pattern-wise in that off of the January 2017 low, we had a beautiful five-wave advance. That's probably a wave we'll call a wave A. This has all been a corrective pattern. Pretty sloppy, hard to distinguish the end of it, except this month. And here's why, is that as of this month, we've completed an almost ideal 1, 2, 3, 4, 5. The low has been right at the 162% external retracement of the wave 4, typically around the extreme for a wave 5, and just above the 78.6% retracement, which is typically the extreme for a retracement for a correction. This is really important where we ended up here in this last couple months, and where this month, October, we've got a good chance of making what we call a snapback reversal, a very significant pattern. So we're in a position, pattern-wise and price-wise, to have completed a corrective decline, which should be followed by what we would call a higher time frame wave C, which should come up to test or even exceed the February 2018 high. And that would be over many months. Keep in mind, this is over a year and a half decline. This was over a 1 year advance. So we should be looking at somewhere around 1 to 2 years of net bull trend that will probably eventually come up at least near the February 2018 high. That's really significant, isn't it? Well, I think it is. And what's significant right now is the pattern has been fulfilled near the extreme of where a correction should be. So if this is all the case, we should be sideways to up to come close to the February 2018 high over the next year or two. And of course, the dollar would be bearish over that period of time because the dollar trades inversely. Let's look at the weekly data before we wrap this up. This is weekly data just over the past year, and that our weekly momentums are bullish. And we've this is again showing some of the price relationships at this low. This is actually the wave 5 of 5 target that was hit. And as you saw on the weekly chart or the monthly chart, the higher time frame wave 5 of B was right in that overlap zone as well. The next waypoint is going to be if we close above the week ending September 13th close, which is 1.10710. We close above that, it indicates indeed this weekly low is complete. Anytime a weekly low is complete, given the extreme position, the monthly chart, we have probably completed a monthly low. Very significant. Just keep your eye on this at the end of this week or next week or any week. If we happen to close above it, that'll be a very significant bullish continuation signal. But let's go back one more quick look at the daily. The daily is what is signaling that the weekly and the monthly, which are both at extremes, those reversals are probably occurring as this daily reversal has. Right now, in the next couple of days, we're probably going to complete the daily high 5-wave advance. We'll have a 3 to 5, 6, 7 day corrective decline. There'll be a wave 2 or B decline, followed by continuation of the bull trend. So we're going to be following up on this really closely in the days and weeks ahead for the euro and the dollar, because it's really looking like all the pieces are coming together for a major euro bull trend, and we want to position for that when we can do so with low capital exposure, and for a major dollar bear trend. And of course, that'll affect many of the other financial markets, not just the U.S., all around the world. We'll be following up on this day by day and week by week in our regular DT reports. Take care.